and we are in the midst of an earnings season. IFCI had come out with its numbers just a short while back. We have with us the top management of the company, and my colleague Ekta Batra will be taking us to that boardroom. Ekta, over to you.
Hi, thanks Nayandara for that. Let's just go across to the IFCI management who is joining in to speak to us. Sir, if you can just, is my voice reaching you?
Yeah, it's there.
Okay.
You are there.
Mr. Mukherjee, I just wanted to start with the asset quality this quarter because the gross NPAs have worsened to 17.3% versus 16.2% on a sequential basis. Can you just take us through the asset quality stress that the company faced this quarter?
Well, if you look at the gross NPA quarter sequentially wise, fine, it's become 70.3%. But if you look at year wise, it has come down from 22.2% to 17.3%. Of course, there is some sort of a concern for the NPA, for not only for us, it's also for the entire financial market. But for me, what has happened is that one particular account of infrastructure in the power sector, and that too related to gas projects, where we have a large exposure. As prudentially, we have taken a call to make a provision this quarter itself. So, but for that, the gross NPA and net NPA figure would have been better sequentially basis and year-wise basis also.
Okay, can you just give us the total slippages this quarter and how much this gas-based power plant that slipped this quarter was?
Well, I would like to go by year-wise basis. That will give you a much better figure. So, and if you look at the numbers, the gross NPA is at 3,451 crores, which is 17.26%, and net NPA is 2,123 crores, which is 11.4%.
2,120 crores.
23 crores is a net NPA.
Okay.
So the gas-based project has added 800 crores to the NPA figure.
What were your recoveries this quarter? Did you manage any recoveries at all? And when do you expect, how do you expect this particular account to move going forward? Do you expect any recovery from this 800 crore account which is slipped into an NPA?
See, as I have told you, this account as far as concerned, prudentially we have made a provision there. This account, there is nothing wrong. This account is waiting for the gas connection.
Okay.
This is a project of 500 megawatt consisting of two phases, phase 1 and phase 2. Unit is ready for the production, and if they get the gas connection, this will start operating. So moment it starts operation, it will be in a position to clear the overdues and the account will become automatically standard. So it is a forced measure, you can say. Because of this, the account, we thought a provision can be made in this quarter itself.
Can you name the account?
Start getting the gas. No, I'm sorry. I think it's not fair to name the account.
Fair enough. What is the exposure? What is the exposure to the
800 crores? I said
to the sector, sir. To the sector. So going forward, how much more of slippages can we see within? Gas-based
project, we have exposure of nearly 1,300 crores.
Okay. And this would include the 800
much we are not expecting anymore. Yeah, of course.
So what is your expectation in terms of asset quality going forward?
You are talking about this gas-based project?
No, just in general your gross NPAs. Sir, your gross NPAs
In general, we are planning quarter-to-quarter basis this gross NPA and net NPA both to go down, and we are expecting at least 2% we will go down by the next financial year. And if you look at the net NPA, my NPA book is 50% of the total NPA. And since in the substandard, the substandard category is 50% of the total NPA of the book. So, and in the substandard, since the provisions are 10%, you are seeing the net NPA figure very high. So, moment we make a higher provision when quarter-to-quarter basis, this net NPA figure will also come down.
Okay. So,
not only we will recover the money, we will make more provisions so that the net NPA figure comes down further.
Okay. What about your restructured book? Can you just tell us how many loans you all restructured in the quarter?
We have restructured 2 accounts in this quarter, and of 160 crores.
Okay, so the total...
160 crores, 2 accounts has been.
Okay, and what is your pipeline for restructuring?
The pipeline as such, around 150 crores we are expecting, including the gas-based project what you have talked just now, another one. So 160 crores we have restructured this quarter. Company as a whole has a restructured book of 1,100 crores, out of which last quarter we did 160 crores. Pipeline is around 150 to 160 crores roughly for this quarter.
Okay, and a run rate of slippages going forward would be how much?
No, I don't want further slippages to come in. I would like to get it reduced.
Okay, fair enough.
I would like to recover more than the slippages happening.
And did you what were your recoveries, sir, in this quarter? Did you manage to recover?
My recovery has been substantially more, 7,200 crores approximately.
In this quarter itself?
Yeah.
And what would your run rate from recoveries be then?
That will be a difficult question, that how much we are projecting, because we are yet to come with the numbers saying that how much recovery will be the next quarter. Because you know, as I have told you, this account which we have made is a substandard. Suppose this account turns as a standard, 800 crores will come back from this account, one account itself.
Okay.
So that will be very difficult to do that. But we want that gross NPA and net NPA to come down by 2% at least.
Okay, so okay, fair enough. Mr. Mukherjee, just focusing on a couple of other parameters, then your net interest margins, where did they stand at the end of FY14?
Net interest margin is 2.4%.
And what is your guidance on the same in terms of margins?
I will constantly grow. Ideally it should be around 3%, but 2.4% on the difficult days is also not bad number. So we would like to grow, and we are growing quarter to quarter basis.
Okay.
If you look at my entire balance sheet, apart from the net NPA which has gone up, all the parameters are plus.
Sure. And lastly, Mr. Mukherjee, how did you do in terms of total loan growth this quarter, and what is your strategy in terms of your balance sheet? What would we expect in terms of further credit growth going into FY15, and which would be the sectors you'll be focusing on?
I am having a book of now around 29,000 crore, and I would like that year end. I would not like to do by quarter to quarter basis. That will be difficult because we do not know how the scenario will change, to end up 40,000 crore for the coming year.
Okay.
29,000 to 40,000 crore I would like the loan book to grow.
Fair enough. Thank you, Mr. Mukherjee, for joining in. So that's the IFCI numbers coming in this quarter, where the gross NPLs have worsened, came in at 17%. Nayantara, back to you.
In fact, IFCI had to restructure 2 accounts also worth 160 crore rupees. Thanks, Adekta, for taking us through that boardroom.